Hello, welcome back. We're gonna be taking a look at Amazon, which just reported earnings, and it looks like they're sliding. The company stock price is sitting at $2,600, down about 10% from what it was today. And the company's stock price has been suppressed. It has been going down and down, already losing 23% and now down 10% more today. It looks like so. Tomorrow we're gonna be having an about 2,600, maybe even a bit less, I suppose. Now we're gonna take a look at the news, what happened here, and you will see that Amazon shares fall on a bleak forecast and slowest growth since .com bust. And so what happened here is that they have the growth rates that were significantly lower than expected, and also they lost some money, of course, on Rivian. We knew about this last quarter. This was expected, frankly. We talked about it even in a video. And basically speaking, they did a little bit worse than they would expect, and also the guidance doesn't look great either. And so the earnings from $7.38 a share than expected of 8.36, they are significantly lower, about $1, and so that definitely plays a big role in the current decline. Now the revenue has increased, yet again the earnings have dropped, and you will see that revenue from Amazon Web Services went up while advertising went down. Now, yeah, they did have a write-off of 7.6 billion in terms of Rivian, a loss, and their revenue increased 7% during the first quarter, which is the slowest rate for any quarter since the .com bust. Significant, and it would happen at some point. I mean, not every company will have its slumps. They will not be growing at significant rates every quarter or every year. That is just not going to happen. And so it does make a lot of sense that it is going down a little bit. Now the thing is, the company also they had the second quarter forecast, which suggests that growth could be even further, between 3 and 7% from a year earlier. And so they project 116 billion to 121, which is missing the 125 that was the analyst estimate. So if we go back to our tool here, we can take a look at the financials. And the thing about Amazon that we know about, of course, is the fact that their free cash flow is pretty much negative because they're spending a lot in capital expenditures right now. They're spending tons of billions, really. And so this kind of negative value here doesn't really and shouldn't affect your analysis, because they are doing it on purpose and they are still very profitable. Now the P ratio is high though, which indicates that the company could be overvalued. We're going to examine that. It has printed more shares, and also their growth has been amazing, which is another great thing about Amazon. Now their margins are a little bit suppressed, but the return on equity is pretty great. Let's take a look though at the financial statements, because they picture a story of growth. And look at the revenue here, from 177 billion almost to 469, almost 70. Amazing growth here, and look at the net income, which is insane, from 3 billion to 33 billion. That's a tenfold increase. That's insane growth of net income. And the balance sheet again has been growing nicely, 27 billion to 138 billion. Another significant increase in total equity for the company. Cash flow statement from 6.4 billion to minus 14.73. Again, the company is spending tons of money in capital expenditures. You will see here, let me find it, 61 billion and 40 in the previous year. Now, if we take a look at the net income, you will see that it's constantly positive, pretty much as we examine, and the net cash provided by operating activities is also very positive. And investing a little bit for the company, purchasing investments, also selling in between, and also getting a little bit of extra debt. It looks like what they're doing here. And they have a nice pile of cash, as you'll see, for 36 billion right now at the end of the period. And again, the free cash flow has been negative lately. Again, on purpose. Remember, these insane capital expenditures decrease the free cash flow, because what is free cash flow is operating income minus capital expenditures. And so when the company actually creates, I don't know, maybe warehouses and things of that sort, investments in plant and equipment, as you would expect, the free cash flow will go down. Now, this will not really affect our stock evaluation tool, because our stock evaluation tool is projecting revenue and is using margins, and so this year will not really affect us, apart from the fact that we cannot get the growth over here, but that's a small problem. Now, the revenue seems to be decreasing for Amazon, so we have to go a little bit more conservative. I'm going to go maybe 8, 10, and 12 here. And the margins, I'm going to go for 5 and 7, which is what we see. Free cash flow margin, we have 121 here. It's significant, I'm gonna go 120, 125, 130, and the annual return of the company 13% is what they are doing right now. And what I want them to be doing right now, because I want to be making 13% annually, and so I want to be discounting 13% from our projected cash flows back to the present value, in order to make sure that I'm getting some money back from my investment. And I hit calculate, and you will see that we are off the current price. This is going down. This is going to be what it was like 2,600, maybe 25, but still our high projections are sitting at almost $1,800. So we're off from the current price. We're higher. We're much higher over here than what we would want it to be. And so right now, for me, Amazon is a little bit expensive. I love the business, and I don't care too much that some growth went a little bit down, and it's like much lower than expected. I know that it can happen in a quarter, and frankly, it potentially even gives me a better entry price if the company's stock price keeps falling. Although it would have to fall a lot is the problem, and so right now I wouldn't enter Amazon, of course. But if it went significantly lower, maybe around these levels, I could think about it. Again, right now, I think it's gonna be a little bit too much for me to enter a company of this sort. I think it's overvalued, and I think I will avoid. So tell me what you think about Amazon. Did you expect this kind of loss? This kind of retraction in stock price, and what do you expect for tomorrow? Leave a comment below, and remember to leave a like as well. That really helps. And thank you for watching the video. And remember to subscribe too if you're not a subscriber. Apple video incoming very soon. Thanks for watching again. See you. Bye bye.